Yes, sir.
Okay, so now we shall go ahead and take an example on AS 29 on provisions, contingent liabilities and contingent assets. Yes.
Sun Limited has entered into a sale contract of rupees 5 crore with X Limited. Now, during 2015-16 financial year, the profit on this transaction is rupees 1 crore. The delivery of goods to take place during the first month of 2016-17 financial year. In case of failure of Sun Limited to deliver within the schedule, a compensation of 1.5 crore is to be paid to X Limited. Now, Sun Limited planned to manufacture the goods during the last month of 2015-16 financial year. As on balance sheet date 31st March 2016, the goods were not manufactured and it was unlikely that Sun Limited will be in a position to meet the contractual obligation. Number 1. Should Sun Limited provide for contingency as per AS 29? Number 2. Should provision be measured as the excess of compensation to be paid over the profit?
So very clearly given that you have signed, that is you are Sun Limited, let us say I am that customer X, okay. So you guys have signed a contract with me to supply goods in the month of April 2016, which is supposed to be the first month of the financial year 2016-17. And we would have signed the contract sometime in Jan 2016 or Feb 2016, right?
Yes.
That is a year 2015-16, that's a financial year. Now what happened? You plan to manufacture the goods sometime in March 2016. So that you'll be in a position to supply the goods in the month of April 2016 to me. I am your customer, right? Now what happened in the month of March? On 31st March, the goods are not yet manufactured, are not ready for delivery. Is that clear?
Yes, sir.
Now please remember, the accounts for the year ending 31st March 2016 will be finalized and are signed or approved by the board of directors generally in the month of sometime in May, right?
Yeah.
That is just before the AGM. So it will be held in the month of June, for example. So in May 2016, when you're going to finalize the accounts, you very well know that the contract, you have actually breached the contract. Yes or no? Because you know that you are supposed to supply the goods in the month of April. By May 16, you will come to know that you haven't supplied the goods. Definitely, you have to pay how much? Rupees 1.5 crore compensation to me. So as on 31st March, when you're going to prepare the profit and loss account for the year ending 31/3/2016, which will be anyway prepared and finalized in the month of May, you better recognize a provision of rupees 1.5 crore in your books. Yes or no? Because you have an obligation to compensate the customer for the breach of the contractual, obligation, right?
Yes, sir.
So the contractual, the clause in the contract. Now, wherein you are promised to supply the goods in the month of April. Therefore, you are supposed to make a provision for breach of contract or provision for compensation payable to customer 1.5 crore rupees. You should make a provision. And can you consider the 1 crore profit expected and recognize only 0.5 crore as compensation payable to customer? The answer is no. Why? You cannot anticipate
Gain.
Exactly. It is against prudence. Do not be imprudent. That is opposite of prudence. What is that? Don't be imprudent or aggressive in your accounting. There is a very high chance of the customer cancelling the contract itself, right? After getting the compensation from you people.
Yes.
Therefore, do not recognize a provision in excess of the profit expected on the contract. And here, if you notice, we should make a provision because, very important, the three conditions that are specified in AS 29 are satisfied. Because you have a present obligation from a past event. Yes or no? What is the event? That is, you have a contract in place and you're not ready with the goods, right?
Yes, sir.
And then probable outflow of resources, very much. It is a more than 50% chance, more likely than not, that you have to pay compensation to me. Otherwise, I'll anyway take you to the court because it's a contract. And then number 3, reliable estimate of the obligation can be made. You know what is the amount you have to pay me? 1.5 crore rupees. Got it?
Yes, sir.
Now let's go ahead and take on the solution. Yes, ma.
Yes, sir. So, for question number 1, AS 29 provision contingent liabilities and contingent assets provides that when an enterprise has a present obligation as a result of past events
That's the first condition.
that probably requires an outflow of resources,
That is second condition.
and a
Probably.
reliable estimate can be made of the amount of obligation.
That is the third condition. All
So
these
a
conditions are
provision
there
should
in
be-
para 14. Okay?
Yes, sir. A provision should be recognized. So, Sun Limited has obligation to deliver the goods within the scheduled time as per the contract. It is probable that Sun Limited will fail to deliver the goods within the schedule, and it is also possible to estimate the amount of compensation. Therefore, Sun Limited should provide for the contingency amounting to rupees 1.5 crores as per AS 29.
So what is the entry should pass? Profit and loss account debit to provision for compensation payable to customer to provision for compensation, right?
Yes, sir.
For compensating the customer for what? For breach of contract. Next.
Yes, sir. So, number 2, provision should not be measured as the excess of compensation to be paid over the profit. The goods were not manufactured before 31st March 2016 and no profit has accrued for the financial year 15.
That's it. You cannot anticipate profits.
Therefore, provision should be made for the full amount of compensation, which is 1.5 crore.
Is that clear, guys?
Yes, sir.
Good luck for your examination. Bye-bye.
Thank you, sir.